What is up, all you beautiful people? This is Mike Ferrossi, and we're here with you with another Mortgage 101, where we discuss all the basics of the mortgage industry and break them down as simply as possible for those new to our industry or those borrowers who are looking to learn just a little bit more. Today, what in the world is a lock? Do you want to lock your loan today? Should I ask them to lock my loan today? Maybe I shouldn't lock my loan today. How's the market look? Maybe we should lock our loan. Guys, stop the madness. Do you even know what you're talking about? There is a staggering number of people out there who don't even know what a loan lock is. It's one of the fundamentals in our business, and it has to do everything with that wonderful rate and price market that changes daily. If you're a mortgage professional originating a loan, or you're a borrower looking to get one, make sure, if you're a borrower, make sure you can trust your mortgage professional. If you're a mortgage professional, make sure you give your borrower all the reason for them to trust you, to keep tabs on the market so you know what it's doing and you know when you need to lock that loan for your borrower. Because when you lock a loan, what you're locking is the interest rate and the price for that interest rate. As we all know, the mortgage market, it moves daily. Sometimes it doesn't move at all. Sometimes we can see drastic improvements or drastic declines in the pricing of our loans, and it can affect people up to the point to where they may not even qualify for the program anymore if it moves too far the wrong direction. But to a lender, to a bank, what is a lock? Well, the process for locking a loan kind of tells all of it to you right up front. To submit a lock request, you have to enter all of the information, all the loan information, borrower information, property information. You have to pick a program, you have to pick a rate and price. You even have to pick a lock term, which is a period of time that you want to lock that rate for. You submit your lock request, and usually, pretty darn quickly, you will get a lock confirmation back from the mortgage company that you're working with. What that lock confirmation represents is a promise. That mortgage company is promising to lend you that amount of money to the borrower who is borrowing it on the property that's being used to secure that mortgage loan. They're going to give you the pricing that you specified at the specific rate that you chose for the time period that you asked for. Did you lock for 10 days, 12 days, 15 days, 25 days, 30 days, 55 days? If this loan's gonna take a long time to close, just make sure, originators and borrowers, that you lock for enough time. And if you didn't lock for enough time, if it looks like your lock is going to expire before that transaction is going to be able to close, make sure that you get that lock extended. There are extension fees that are involved, but get that lock extended so you don't have to worry about rolling the dice with market movement, and you can close that transaction at an expected rate and at an expected price. Because the last thing that you want is coming down to the 11th hour and being surprised with what you see as it pertains to the interest rate or the loan costs that are on that itemization you're looking at. So that's it. It's very simple. A lock is a promise, but don't forget, that promise goes both ways. Now, that mortgage lender is promising you that interest rate and that price. They are promising you comfort and shelter from the storms that can be the daily movements of the interest rate market. But you're promising something too. You're promising that you are going to borrow that amount of money. And not only are you going to borrow that amount of money from them, but you're going to secure it to the property that you said you would. And you're going to use the loan program that you requested. And your credit score, your loan to value ratios, the property's appraised value, your debt to income ratios, all of that you are promising to be true and accurate when you submit that lock request to the lender. So remember, if any of those change, if the subject property changes, if the loan program changes, if your DTI changes, every once in a while, these things could make you ineligible for a specific loan program, or they could make your lock null and void, especially when it comes to program changes and property address changes. Those are big ones. As soon as something like that changes, you no longer have market security. That loan now has to be relocked, and you're subject to all that market movement all over again. So a lock is a promise, but it's a two-way promise. And it's a big one. Just because it's something that gets done thousands of times a day in our industry doesn't mean that it isn't important or that it should be taken for granted. Locks are important. They are the promise that secures every mortgage transaction for every borrower. Don't take it lightly, pay attention to them, and keep track of those pipelines, originators. Don't let your locks expire. Thanks a lot, guys. I'm Mike Ferrasi, Mortgage 101, and we'll talk to you next time.